Good evening from Lagos, Nigeria, and thank you for joining us on the program Capital Market. I'm Temple Ashaju. Now, following the offer for subscription of federal government's 100 billion naira Sukuk program, Nigeria's borrowing strategy is expected to expand further. The offer, which is coming less than a month after the issuance of a $2.8 billion Eurobond program, remains a source of concern to investors due to the falling price of crude oil, which is Nigeria's economic driver and one that is also expected to always help Nigeria to pay back some of these loans. On the program this evening, we'll be joined by a fixed income analyst to analyze these schemes as well as the recent plethora of open market operations carried out daily by the Central Bank of Nigeria. But let's begin the show this evening with the closing figures from Friday, and we'll start off with equities. It is typical of us to do that here on the program. We'll start with equities, where negative sentiment in the equity market persisted, with the NSE All Share Index declining by 0.02% week on week to 30,866.82 points. And the market capitalization or equity capitalization shedding some 269 billion naira over the week. Now, the loss was driven by declines in bellwether stocks in the banking, such as Access Bank, Stanbic IBTC, Dangote Cement from the industrial goods segment, and of course, Lafarge Wapco. We have Nigerian breweries, of course, and Guinness, as well as international breweries from the consumer goods segment of the market. But if you look at the other side, we got some increase in terms of the sectoral performances now in the banking names, banking segment rather, at the end of the day, up by some 0.89%, and the consumer goods segments up some 0.64%. Oil and gas was also positive at the end of the day, rising some 198 basis points. And in terms of the unlisted securities market, which is the NASDOTC, you got the USI, the unlisted securities index, now closing this week at 703.90, declining some 0.24%, with the market capitalization settling at 489.22 billion naira. There was decline in the volume of securities traded this week by 35% to 26.84 million units. And the value for these transactions was put as to 527.30 million naira. There was just 63 deals in the markets this week after the volume boosters from CSCS, Friesland, Wamco, Campina, and Afriland helped to bring some volume into the markets for the period. In terms of the fixed income market, you have the CBN during the week stepping up its liquidity mop-up with open market operations auctions on most days of the week except for yesterday, which is Friday. CBN mopped up a total of 645.32 billion naira via OMO auction, including the stabilization security, at a higher stop rate of 13.87%. And that was a rise of 61 basis points week on week. As a result, average yields on the fixed income market increased some 74 basis points to week on week to 15.61%, following the expansion across both ends of the curve. If we look at the numbers for yesterday in terms of bonds, now we had April 2037, February 2028, one of the very active securities on the bond side of things, finding its way back to the transaction side of the secondary markets at FMDQ Auto. So the 17th of March 2027 was also priced high at 102 naira 85 kobo compared to the low of 102 naira 37 kobo. And in total, we had just 24 deals valued at 7.68 billion naira. For the treasury bill side of things, yesterday at the FMDQ market, we had 534 deals valued at 270.59 billion naira, and investors continued to give cold shoulder to the short end of the curve, but with more attention to the longer side of the curve. The numbers on the screen represent some of the securities that had less investments from investors due to the risk of sentiment that investors have continued to put there, and of course the maturities that created some liquidity during the week via open market operations of the central bank this week. Now, on Thursday, the federal government announced the second series of its 100 billion naira Sukuk program, an ethical investment product issued through the Debt Management Office and backed by full faith and, of course, credit. The 7-year FGN Ijara Sukuk matures in 2025 and is offered at a rental rate of 15.74%. In line with the previous offerings plans, the proceeds are expected to be used for construction and rehabilitation of key roads across the 6 geopolitical zones of the Federation. The offering, which closes on Monday, has a settlement date of December the 28th, with rental rates billed to be paid half yearly directly into bondholders' accounts. We're joined now by a fixed income analyst at Zcrest Capital, Onamdio Lesailoka, who's been here once on the program before. So let us look at these activities that we're seeing in recent time in the market. We've seen the Euro bond flotation by federal government. We are also seeing reopening now, not technically reopening, but again, it's kind of a second series of the 100 billion naira Sukuk program. The first time the first series opened, we spoke to some government officials and we asked if this is going to be reopened and how it is going to be redeemed, and they sounded unsure. But it looks like the very first version of the Sukuk program has gone a long way to do some good to the infrastructure projects of this country. You guys at Zcrest Capital also invested in it, and I'm sure you know what your clients are saying, you know what investors, retail and corporates generally in the country are saying. What are they saying about this new 100 billion naira Sukuk program?
Okay, thank you for having me on the show, Temple. So for the Sukuk bond, you know, like you said, last year, the federal government launched the inaugural Sukuk program with a 100 billion naira offering, and it was slightly oversubscribed. So it was successful. And on the back of that success, the DMO reiterated that